E-mini S&Ps rallied to end the week after a stronger than expected jobs report. We saw E-minis fall just shy of 5,000, marking yet another new all-time high and another new all-time close. Now, year to date, we've seen E-minis rally about 3.5%, a lot of that coming on strong earnings, mixed data, and Fed rate cut expectations, but ultimately a strong economy is what will fuel these equities higher. And given the fact that we may have pushed a rate cut from March out to May or June, it is still out there on the horizon. Stocks see that, and that is very stock favorable, but a strong jobs market helps to propel everything. We saw a strong jobs market today. That helped us to push up to yet another new all-time high, again, closing just shy of 5,000 in E-mini S&Ps. Now, what does this mean for volatility? Well, typically we talk about volatility as moving inversely to the indices. So when we see E-minis rallying up to new all-time highs, we'd expect volatility to move lower. However, that didn't happen today. We saw volatility settle roughly unchanged on a wider trading range. Ultimately, the market's kind of keeping one eye on what's happening with the economy and the Fed, and another eye on what we saw in the regional banking sector this week, where we saw some cracks in the dam. Clearly, the market has some concerns there. So while we did close unchanged on the day amid new all-time highs, we actually closed higher from last Friday's close. Lastly, let's talk about what we have next week. Next week, we don't get a whole lot of economic data, but the week starts early on Sunday. We'll hear directly from the Fed chairman speaking on 60 Minutes. Then we'll get a slew of Fed speakers who are back out on the speaking path after being under lockdown around the January FOMC meeting. We'll also continue to get earnings, which will filter in throughout the week. So a big week and a big move higher today for E-mini S&Ps, moving up over 1%, falling just shy of 5,000, ahead of the Fed chair speaking on 60 Minutes on Sunday, a slew of Fed speakers and earnings to filter out the rest of the week.